On today's World Insight with Tian Wei, the just concluded Summer Davos Forum focused on the fourth industrial revolution. Can technology help China overcome the trade war with the U.S.? And the AIIB Vice President in charge of policy and strategy discussed his bank's prospects in attracting investors and developing infrastructure.
Countries are trusting us. They see that we are truly multilateral.
Hello and welcome to World Insight with me, Tian Wei. The program is coming to you live Monday to Friday on CGTN. This year's Summer Davos came to an end today. On Thursday, around 200 meetings were held and over 2,000 participants from more than 100 countries and regions attended. The summit covered a range of topics like the opportunities and risks regarding new technologies like artificial intelligence and customized medical care. It also looked at China's economic outlook and the ongoing trade war between China and the United States. Let's take a review.
The Summer Davos Forum focused on shaping innovative societies in the fourth industrial revolution. Such a revolution is marked by the advent of cyber-physical systems, or the novel ways in which technology becomes embedded with societies and people. Examples include artificial intelligence, breakthrough materials, and approaches to governance that rely on cryptographic methods such as blockchain.
A new round of industrial revolution has come into being in the age of globalization. We have gone through several rounds of industrial revolutions, and they have all boosted the globalization of trade. And this new round of industrial revolution has come into being against the backdrop of globalization at a time when mankind is facing new challenges and has to come up with new wisdom to respond to these new challenges.
Despite the global outcries against unilateralism and protectionism, Washington has ramped up its tariffs once again against Chinese exports. The numerous rounds of China-U.S. trade negotiations have been ineffective in de-escalating the trade war. In response, Premier Li has voiced confidence in China's economy during the summit. He reaffirmed China's determination to continue opening up its economy and committing to globalization.
China's reform and opening up in the past 4 decades is also in keeping with the trend of globalization. In his keynote speech in the Winter Davos Forum last year, President Xi Jinping once again stated China's firm commitment to opening up. China will further open itself at a faster pace.
Despite the ongoing trade war with the U.S., China has maintained a strong and steady economic growth. In the past 12 quarters, growth of China's GDP has been stable at between 6.7% and 6.9% per quarter. China is determined to reshape its economic structure and growth patterns from quantity-oriented to quality-oriented, with innovation-based growth drivers contributing over 1/3 to China's economic growth and more than 2/3 of job openings.
For more discussion related to the World Economic Forum's annual meeting of the new champions, also known as Summer Davos, with us in our Beijing studio, Liu Baocheng, Dean of the Center for International Business Ethics from the University of International Business and Economics. In Hong Kong, we have Hong Hao, Managing Director and Head of Research at the Broadcom International. In New York, we are joined by Max Wolf, 55 Capital Partners, also Professor of Economics from the New School University. Gentlemen, welcome to our program. I want to start by asking you about some of the points mentioned in the speech given by Chinese Premier Li Keqiang. Many have been quite impressed by some of the points he made. First of all, he's been talking about China's exports. Professor Liu, let me throw in some of the numbers he mentioned. He talked about 40% of China's export goods and 2/3 of China's export goods regarding high-tech products are actually produced by multinational companies operating in China rather than Chinese companies. Is that point important for the ongoing U.S.-China trade war rhetorics?
I think he has two implications in that. Number one is that he shows appreciation for foreign companies who are operating in China. Although they are here to seek profit, they contribute a great deal to Chinese economic growth and also to particularly to China's export with higher value. And the other implication is that, okay, by penalizing China from the Trump administration, actually they penalize international companies, and in particular, American companies that are harvesting their profit, that are getting engaged with China's development, and on the other hand also that China is a big manufacturing powerhouse, and we actually import a lot of spare parts, a lot of raw material from third countries.
Global supply chain, China is only
So
part of it. And Professor Wolf, from your perspective, how do you see those two numbers? Of course, throughout the speech given by Chinese Premier Li Keqiang, he didn't mention the United States at all. Of course, but before, one day before the speech, it was the United States, the Trump administration, which has announced its decision, so-called to levy tariffs 10% on $200 billion Chinese export to the United States. How shall we interpret the two sides, and their very different attitudes?
Yeah, so I think the Chinese are beginning to occupy the role that we have very aggressively deserted in the United States, which is the role as of the sort of global system operator and guarantor. And what I think we're hearing from Chinese leadership is that in the leadership vacuum created by this sort of rather sudden shift of the U.S. policy position from guarantor, celebrator, sometimes force feeder to the world of free trade rhetoric, we now have a protectionist rhetoric and policy, and that's a bit of a shock to the system. And in that shocked environment, there's a vacuum, and in that vacuum, probably in part as a strategy in the trade conflict, and in part as a long-term strategy to occupy a leadership role in the global economy, we're seeing a decision, looks like, to take the high road, and to take the high road to a higher sort of position in this game where you say, look, maybe the United States has walked away, but we welcome global business, we welcome free trade, we will lower our tariffs, except for against countries that are sort of hitting us with tariffs. So I think it's a sort of subtle, nuanced play.
Quite a contrast, as some suggest, the attitude coming from China given in the speech of the Chinese premier. Mr. Hong, on the other hand, I mean, if you look at the trade dispute between China and the United States, one of it, at least on the list of the United States, is about high-tech products and also China's scientific and technological development. On that point, the Chinese premier was not apologetic at all. He has been talking about the achievements through China's educational system, research, and also development of IPR. And today, there seems to be quite some impressive results. Mr. Hong, how shall we interpret that?
Yeah, well, I think China now spends much more money in terms of R&D as a percentage of GDP than any other countries. And also, every year, the number of patents that China filed is the most of all countries as well. So I think China obviously is making breaking new grounds in R&D and technological invention. So to say that much of the technological advance that China has achieved is basically through intellectual property theft is probably a huge overstatement, and I think probably the USI substantially underestimate what China can do in terms of R&D.
Does it mean, Professor Wolf, that the two sides are getting ever further apart before the next round of negotiation, if there is going to be any next round of negotiation by the end of September?
Yeah, it does not look like folks are getting closer. On the sort of back-channeling, one is hearing, at least in the U.S., a now rising whisper of a rumor that the Trump administration has a grand plan to lower Chinese and global expectations and then negotiate in hopes of at least seeming to pull off some sort of agreement right ahead of our November midterm elections in the hope of using that to solidify Republican opportunities in the election cycle. So it is possible that for reasons of domestic election politics, we'll see a warming here, but it has been cold and getting colder now for a lot longer than the rosy forecast suggested was possible.
Also, in the speech and in the discussions related to that speech throughout the Summer Davos, Professor Liu, we have seen quite some discussions about whether the new industry, so-called, the new innovating and also innovation kinds of industry, internet-related, for example, could really bring more momentum to the general economy. Professor Liu, of course, there's not specific numbers that we can pin down right now, but certainly the Chinese premier is talking about equal treatment and equal opportunities, and these are very important phrases for some of the internet-related, the new technology companies, as well as platform economy, as they say, Professor Liu.
Yes, I think now Premier Li is really hit on the right target by really providing equal treatment to all market players. You can really generate fair competition, and so that all market players have a reasonable expectation on what they can really harvest after they put up either intellectual or the financial investment into their endeavor. And in the meantime, China has also benefited from the competition between state-owned firms, private firms, and foreign invested firms, etc. So he wanted to reassure during the current climate that these companies are really given a fair level playing field,
right,
so that they can really compete on equal basis.
Mr. Hong, according to that speech, 1/3 of China's economic growth rate has been contributed by the so-called new drivers, meaning innovation and also improvement-driven economy and sectors. Mr. Hong, as China is experiencing some dramatic transformation in its economic structure, will the so-called new drivers be able to help China solve some of the biggest problems and challenges it is facing right now?
Yeah, I would say so. I think now one of the biggest challenges that we're facing really is the aging population. As the Chinese workers, the number of Chinese workers approaching the lowest turning point, the number of working population that is in working to help and support the retired population is actually, the ratio is dwindling. So I would say that by using more and more technology in our production process, it's going to increase productivity, and so we're probably going to be able to use less people to help and support the retired aging population. So I would say that in that regard, I think technological advance is a huge help.
But technological advances, can they help with the systematic ills or challenges? Professor Wolf, you know that in China, consumption has been such a new driver for the economic growth rate, but at the same time, people wonder about the new momentum, how sustainable it is if the system would not be able to efficiently reform and opening up. Of course, the Premier also addressed those issues in his speech about China's further reform and opening up, very specific measures from tax cuts to some of the most important equal treatment measures to all kinds of industries of different natures. So, Professor Wolf, will they solve the problem? That is the question, isn't it?
Yeah, so I do think there's a lot of prospects. I don't know if the entire gap would be closed, but a significant portion. And I think the real question is, can you have a slow adjustment, because this is a problem that will phase in over time, so there'll be time to experiment and roll out increased policy response. And the question is, can social policy, macroeconomic policy, monetary policy, trade policy, and technology make a plausible transition without a big readjustment? And the answer actually sort of looks to be yes, because that's enough policy levers with enough lead time that it's possible. So there's sort of two questions. Is it possible? I think we have to be optimistic. I think the answer is definitely yes. The harder one is, will we do all the hard choices? Will the Chinese leadership and general public go in for all the changes required? And that's a little bit to be determined, but there's no reason not to be optimistic there as well.
Well, Mr. Hong, what's your thought about that, particularly regarding some of the reform measures and measures that the Premier termed as not necessarily enormous stimulus, but measures systematically to kill some of the earlier challenges in order to make sure the growth could be healthy?
Yeah, well, I think the direction of a further reform is really towards a more open Chinese economy. I think for the past 40 years, since the reform and open started, many of the local domestic Chinese firms has grown stronger. Technologically, they're getting more sophisticated. So I think, at this point in time, at this juncture, they're probably more than ever to be ready for foreign competition. So once you introduce a foreign competition, it's going to lift the level of the game, lift the playing field in the domestic Chinese market further. So I think it's, in a way, it's going to give a bigger playground for the domestic Chinese firms and better markets and better competitors to play with.
That's beautifully said, but Professor Liu, there is some concern about whether implementation will be done leading up or following these promises.
Yes, I think, given all the policy...
Which the Chinese leadership also talked about.
That's right. Given all the policy and the political optimism, I think the rule of law is still very important to assure that there is a predictable track that companies, all market players, and even consumers can really predict what is going to happen next. And also, by substantially reducing the burden onto companies, it requires not only the central government but the local government, and every branch of the local government should be there to clearly understand the directive and make it a reality for the companies and for the consumers.
Well, those words we have heard over and over again, isn't it? The explanation, Professor Liu, you just give. But the issue is about implementation and the efficiency of implementation in order to give the economy a boost in front of challenges. Having said that, though, the Premier did mention some specific wording of things that should be changed. He talked about prudent and yet inclusive supervision. Very interesting, Mr. Hong. If you are looking at China's stock market, if you're looking at China's listed companies, if you're looking at the competitions between the state-owned and private sector, and also international companies, so how should we interpret this prudent yet inclusive supervision?
Yeah. I would say that it's already happening in the financial industry.
Give me some
I think
examples.
In the past, the insurance industry, the broking industry, and the banking industry, they all have their own regulators. So they're basically minding their own fields. And when they send out new policies and new rules, they more often than not fail to consider in full the impact of these new rules and new orders on other industries. So I think the stock market crash in 2015 is a really good example. So back then, basically, three departments are basically regulating their own firms, but there's very little coordination. And I think the result is there for all to see. So I think now we've progressed. Since last year, there was a merge of some of the regulatory bodies, and I think there's better coordination at the top as well. So I think it's already happening in the financial industries.
Prudent, inclusive, that's the words being used to describe the supervision China aspired to have, Professor Wolf.
Yeah, but I think the idea here also being that prudent means long-term and still figuring out what the national economic development goals are, but inclusive, at least in my ear, sounds like an opening up to more global firms. Clearly there was specific language focused on the financial firms, which I know have been very anxious to get into the Chinese markets. I think as the debt dynamics on internal indebtedness in China shift, and as the global financial economy gets more developed, hopefully, and more integrated despite the trade frictions, it's going to be very exciting for financial firms to enter China. And there the question is, you need a regulatory framework that's world-class to get the best performance, but being more inclusive means basically integrating the Chinese financial economy into the global financial economy, which is probably one of the last remaining developments to make China potentially the world's premier economic superpower.
Right. But Professor Liu, it is very clear, as some of those who participated in the Summer Davos talking about China-U.S. trade relations, about $200 billion that the Trump administration recently decided, it's poisoning the atmosphere, even though the number of that trade or tariff is not necessarily gigantic in terms of the overall economy of both sides, and yet the kinds of air and the kinds of harming to the confidence of both economies and the global economy is something most people are concerned about. If the Chinese leadership, as being demonstrated in the Summer Davos this time, reaffirm the audience coming from all over the world with words, at least for now, about the future actions, will that be able to help to lessen the so-called poisoning of the atmosphere?
Yes, it is, as the biggest economy and also as the biggest source of innovation for so many decades, and the sudden dramatic shift of the attitude from the U.S. administrator is really shocking to the whole world. But however, that really paved a very stark contrast in terms of backdrop, where China is standing out to defend global multilateralism, and it's there to defend the climate change issue, as there to raise the optimism among those investors and business people that, hey, the second economy is offering you the opportunity to work better, right, and to have a better treatment.
Mr. Hong, before we go, very briefly from you, China is well known to be able to fight its way out of a dark tunnel. That has been mentioned by the Chinese premier also at the speech he gave at the Summer Davos. When there is difficulty, Chinese are really geared up in order to overcome those difficulties and even figure out some new solutions that they could use for further reform and opening up. Is this the time, Mr. Hong?
I think so. I think the Chinese resilience has been resounding. I think we have a very long history to prove that. I think now it is the time, and especially at a time when sort of a foreign pressure is getting intense, it's actually a time to test the resolve and the resilience that the Chinese people has exhibited for thousands of years.
All right. Before we go, final one sentence, if you can, Professor Wolf, from your side.
Yeah, look, I think that we've seen lots of doubters and lots of international crises from 1997 to 2008, and more or less this experiment, this sort of grand and inspiring experiment, has continued, and I think you'd be a fool to bet against that continuation going forward.
All right, Max Wolf, Liu Baocheng, and Hong Hao, thank you so much, gentlemen, coming from China and the United States, coming over to our discussion today. Really appreciate it. Thank you. And you're watching World Insight with me, Tian Wei. Still to come on our live program. I spoke to AIIB Vice President in charge of policy and strategy. He discussed the bank's prospects in attracting investors and developing infrastructure. We'll be back after this. Welcome back. You're still watching World Insight with me, Tian Wei. The program is coming to you Monday to Friday live on CGTN. In the ranking of multilateral development banks, the Asian Infrastructure Investment Bank might not be as famous as the World Bank, but it is up and coming. The bank opened for business less than 3 years ago. It has grown from 57 to 87 members worldwide. More than $5 billion have funded 27 infrastructure projects in countries like India, Bangladesh, Indonesia, and the list continues. China is the bank's headquarters and the initiator and the biggest backer, contributing a quarter of the bank's capital. However, the bank's China connection has also been reason for some to be skeptical about, and resistance from countries such as the United States. At the sideline of the Summer Davos in Tianjin, I talked to Joachim von Amsberg, who's the AIIB's Vice President in charge of policy and strategy. He discussed the challenges facing the bank, including how to attract public and private investors.
Development bank that is trusted.
Joe Kim, welcome to CGTN.
Thank you.
There are a lot of things going on these days. Trade protectionism, unilateralism, debates about where the world is going. AIIB is relatively new. So what does that mean for a development institution like yours?
AIIB was created just 3 years ago. So we have a short story, but we're very happy with our story. I think we have began to really build a credible story of a multilateral development bank that is trusted. We started with 57, now we're at 87, so we've gained 30 members over the last 2.5 years, and I think it's a sign of the confidence that has been built. Countries are trusting us. They see that we are truly multilateral.
One thing is very important. Where does the money come from? Is it only from China, or is it a partnership coming from everybody?
So our capital comes from everybody. China put up about 1/4 of the capital. Half of the capital comes from the other Asian countries, and the last 1/4 comes from non-Asian countries, mostly Europeans and then some African and American countries. Now, beyond that capital, we will raise funds in the capital markets. So actually, the bulk of the money in the future will come from the bond markets, where we will issue our bonds.
I see. When is that going to happen?
We don't know yet for sure, because we don't need the money right now. But when the moment is right, we want to establish a presence in the capital markets, because we got our AAA ratings. We're very proud of that. It's a big sign of confidence and trust. And so we want to establish ourselves as an issuer in the capital market, and we'll do that when the time is right.
But still, you haven't answered my question, which is about vulnerability, some could say, about the AIIB as a result of all of these global changes and geopolitical debates, if not apparent wars.
So I didn't talk about that because infrastructure investments are long-term. They are meeting the needs for electricity by hundreds of millions of people, of businesses. They need the need for transport connectivity. These are long-term needs. They are not really affected by what's happening one day or the next. However, we, I think, are part of a multilateral system. We are part of a region, Asia, that shows how much the world and how much every country benefits from openness, benefits from trade, benefits from connectivity. And we really hope that the current disturbances to international trade will be temporary.
But the argument for unilateralism and concerns about globalization is exactly against that, the connectivity. So if that is rising, there seems to be much less space for AIIB for the future.
I don't think it will rise, and I have the hope and the confidence that the enlightened self-interest of all countries will prevail, that people will recognize and see the history, see how countries that have opened up, countries that have invested, countries that have promoted connectivity have done better, and that those countries which have closed their borders, have imposed protectionist measures, have fallen behind. So I don't think many countries will stay on that latter track, because in the end it does not benefit them. And Asia, East Asia, is such a shining example for the benefits of openness.
The other thing about what you're doing with AIIB, and certainly the main task, infrastructure building, has a lot to do with the debates that we see in different countries. For certain administration, they would agree to do certain projects, and they are very eager to push forward those projects. But then once the administration changes, it seems that the country has changed its mind, at least in the federal government. So what does that mean for AIIB? Once again, the vulnerability within it.
So on the one hand, we clearly follow country priorities. We have our project quality requirements. We require that projects that we finance are financially and economically viable. We require that they follow international social, environment and governance standards, so that money isn't wasted in corruption, that people aren't hurt, or that the environment isn't hurt. So we have these long-term standards, and we require them from all projects that we finance. I think that will ensure that our financing will stay relevant. We're also asking, what is the infrastructure need of the future? And invest in those projects that we believe will be relevant tomorrow, in 10 years, in 20 years.
But as you may know, that process could be very messy. So AIIB, with a very lean team, Are you ready for all these exacting works?
We have to be, but the primary responsibility lies with the government, lies with the company that does the project. We are a bank, and we care about the standards because we don't want to finance projects that do damage, but the responsibility for implementing the project is the government or the company,
Are you
our
kicking the ball
borrower.
back to their court?
No, but it's the responsibility. The country is in charge of it, the government is in charge of its own country. And we cannot be the policeman of another country. That would actually be quite inappropriate.
Right.
We can just be the bank that insists on high quality projects and insists that our financing is not used when people are hurt or when funds are misused in corruption.
After successful operation for 3 years, AIIB has not, in fact, achieved its operation amount, financial operation amount, which has been the goal set earlier. What is the reason behind this?
Because quality comes first. In the end, we look at the pipeline of projects, and we only approve financing for projects when the project is well prepared and meets our standards. We announced expectations about how much we would finance, but we didn't know exactly how much demand there would be, and we didn't know how well prepared each project was.
Yes.
But in doubt, if a project isn't ready, we need to send it back and say, no, we need to do more work on it.
There's one thing that people really are looking at, that is the amount of investment that you're putting in. Of course, assuming those are safe and therefore showing your capabilities.
Well, one of our peer institutions, the Asian Development Bank, has estimated 1.7 trillion of infrastructure investment needs in developing Asia per year.
Yes.
Now, that exceeds by far our capacity, and the capacity of the World Bank, and the capacity of the Asian Development Bank. So all we need to do is work in partnership. Ask whether our financing can help unlock the financing by others, and in particular by private investors, and in particular by institutional investors who are having on their under management tens and tens of trillions of dollars that they would like to deploy for good returns.
Projects of infrastructure, projects of connectivity, there have been very different views about the feasibility of those projects, whether it is between China and some of the Asian countries, and the IMF's views about that, and things like that. Will it still be the same, the close cooperation between some of the other development banks and financial agencies and AIIB?
I think the differences you're referring to are much more differences, let's say, between individual countries' governments and an international organization, or between financial institutions and the government. I have not seen serious disagreement between the multilateral development banks, because we are so similar in structure and policy, and similar in our mindset to help our clients with high quality projects, and similar in that we are not driven by a single country's needs, but we are driven by the collective of the international community that forms our membership. So we have a very technical view on projects. We don't ask about the politics. We ask, is the project good for the people in that country, economically, socially, environmentally? And typically when technical people ask that question, they come to similar conclusions on, in particular, infrastructure projects where one can measure the returns easier than, let's say, in social sector projects.
People have been thinking about whether AIIB is going to be inclusive enough. About AIIB's cooperation, we have recently noticed, Joachim, even these days, the president of AIIB, Mr. Jin, has been talking about AIIB is open to all that are willing to work with AIIB. He even said, quote, that even includes the United States, end of quote. Now, what exactly he meant? And is the U.S. already approaching AIIB for further information about cooperation?
I'm not aware of any discussions or any approachment, but I am saying any country, including of course the US, would be very welcome to approach us. It is ultimately a decision of the current membership to admit new members, but from all conversations I can tell that new members would be welcome, and that would include the US and of course also Japan.
Talking about AIIB, there's another set of questions that I really need to ask. That is, what about the returns? Infrastructure, though, it's very difficult in the short term. How shall we see the potential of AIIB embracing new partners from the private sector? Is it really possible?
So first, we are a bank, so yes, we need to be paid back. Otherwise, we cannot run as a sustainable bank with the highest quality rating. Because governments often invest in infrastructure projects that have social returns rather than financial returns.
Right.
Think of rural roads. Typically, the governments will pay back from its own tax revenues. On the private sector side, we expect projects to generate the necessary financial return to pay back our loan and to ideally also attract other investors into the project. So here we're talking about revenue generating infrastructure, a power plant that sells its power to the grid, a toll road that charges tolls to the users.
That's right.
This is a typical revenue generating infrastructure projects. Now, if those are financially well structured and the contracts are written well, then the experience shows in several countries that you can actually attract private capital. The presence of multilateral lenders like ourselves helps, because when private investors see that an international lender like ourselves is present, they get some comfort, because the governments that are the hosts to these projects are our shareholders. So they have no interest to hurt a project that is financed by a bank that they co-own. I think that creates very positive incentives for financial viability of projects.
But on the other hand, it's always vulnerable, particularly now if you look at the world economy. Of course, the so-called trade war is still a small number if you look at the global GDP, but it is really influencing on the confidence about the prospect of global economy, which has to be seen over a long term of its financial return. Has AIIB been thinking about this quite a lot recently?
Of course, a decline in trade would possibly reduce demand for certain transport services, for certain transport infrastructure, or even energy infrastructure. But we have not yet seen that this translates directly into demand for financing new projects or the supply of capital. I think there is still an expectation that countries will come to their senses and recognize that cooperation and the reduction of trade barriers is in everyone's interest. On the other hand, if tensions continue or expand and trade really suffered, of course there would be an impact on, for example, traffic forecasts for certain projects. That has to be factored into the financial viability calculation for each project, and maybe some projects that otherwise would have been built won't be built, but that's hypothetical so far.
Right. Is AIIB going to be able to endure all of those procedures, work on all of those details while you are also burdened with many of your development projects?
Yeah, I think it is less about our own role, because we are protected by very special immunities and privileges, because the governments of that are hosting these projects are our shareholders.
Yes.
It is more about disputes between different investors and between private investors and governments. And speedy conflict resolution is exactly one of those critical elements that investors look at. So having mechanisms, a neutral forum, an efficient mechanism to resolve disputes and conflicts is actually a very important criteria for a private investor to put their money into a long-term project.
China has been working on several things. For example, the Belden Road initiative, together with many partners. AIIB is an important contributor to some of the projects about the Belden Road. And meanwhile, China has been thinking about what China calls community of shared future, meaning everybody is connected and there are common goals that we have to work together for. As AIIB, as a regional financial development institution, what do you make, from your perspective, some of the ideas China has raised and also has been in discussion with its partners?
So we believe the Belden Road initiative can be quite helpful to motivate countries to look at their infrastructure investment needs and to motivate investors to look at those opportunities. And Belden Road can be helpful to coordinate investments, especially when you have transport energy projects across countries. You need to coordinate the investments on both sides of the border. So that's important. And if we get engaged in a project, it is not because the project is Belden Road or is not Belden Road. It is because it's a good project that has high returns for the country or in terms of financing, and a project that meets our project standards on social, environment, and governance aspects.
What if people ask you, what's your relationship, AIIB, 3 years in operation, with the country and the government of China? What exactly is it?
China has been the initiator and remains the largest shareholder of AIIB. And China has been a very strong supporter of AIIB. But China has initiated a bank in which the other 86 shareholders hold almost 3/4 of the capital. So all decisions are done in consultation, in consensus with the entirety of our shareholdership. And that's the beauty of the model. Inspired by China, led by China, but with very clear, transparent, and effective multilateral governance where every country has a very clear voice in decision making.
Joachim, what a pleasure to see you here and see the efficiency of AIIB, even within the answers you give. Such a pleasure. Thank you so much for being with us.
Thank you very much for your interest.
Best.
Thank you. Thank you.
Joachim von Emmelsberg, Vice President of AIIB, Asia Infrastructure Investment Bank. That is all the time we have for today. If you'd like to see more, try to find us World Insight CGTN into your search engine or check out our YouTube channel. You can also follow us on Twitter, Facebook, Sina Weibo, you name it. From me, Tian Wei, and everyone of the World Insight team, thanks for watching and tune in again next time for insights across China and around the world. Good night.